Then there can be a non-dividend distribution. That means the distributions that are not paid out of corporate earnings and profits. So if there are no profits and distribution is being made, that we call as non-dividend return of capital distribution, which is not taxable. Then we have money market funds. So money market funds also pay dividends and mainly offered by the NBFCs, such as mutual fund or stock brokerage firms. So whatever amount received from money market funds are considered as the dividend and not as an interest, and are taxable as a dividend. Then instead of cash, you may get stock as a dividend or distributions. So stock dividend is a distribution of stock instead of cash. So a stock dividend is not taxable. Is not a taxable dividend. Then there can be DRIP. DRIP is dividend reinvestment plan. So dividend reinvestment plans allows a taxpayer to use their dividends to repurchase or purchase more shares of the stock. So instead of receiving the cash, you reinvest the dividends to buy the more shares. So in such case, the if there is an increment in the fair market value, then only you will be reporting a dividend income. So for example, a taxpayer owns 100 shares of some company, which is currently trading at $50 per share. Now, through DRIP, dividend reinvestment plan, the taxpayer buys 50 more shares at $40. So $10 benefit. So this $50 is the market rate currently going on, and they get it for $40 through DRIP plan. So $10 of difference between the fair market value and the purchase price, multiplying by $50. So $500 will be considered as a income, as a dividend income, and shown in the 1019 Schedule B or 1040. Then there are mutual fund distributions. Mutual fund is kind of an investment like pool of investments, and generally a taxpayer who receives mutual fund distributions during the year, they will also get 1099 DIV for that. And based on the character of the income source, it may be considered as ordinary dividend. It may be considered as qualified dividend. It may be considered as capital gain distribution. It may be considered as tax exempt interest. It may be in exempt interest dividends. It may be considered as non-dividend distribution. So it depends on the character of the income source, which will be defined by the payer in 1099 DI. Most commonly, these dividends are taxable as ordinary dividend or ordinary income. If it is a capital gain, then obviously it will be so if it is a capital gain, then it will be considered as a long-term capital gain irrespective of irrespective of holding period. Then there can be constructive distributions or constructive dividends. Constructive dividends are like uh, if company is paying personal expenses for the shareholders. So that becomes constructive dividends, or unreasonable compensation is being made, or unreasonable rents being made, or there is a cancellation of shareholders' debt, or company transfers the property for less than the fair market value. So whatever the difference will be, that will be considered as a constructive dividend. Or if company is giving loan at below market rate, below market interest rate. So in such cases, whatever the difference is, that will be considered as the constructive dividend and will be taxable accordingly. So to summarize, for dividend income, it can be qualified, it can be ordinary. Ordinary income is shown in Schedule B if it is more than $1,500. If any of the dividend is more than equal to $10, the payer of these dividend will issue 1099 DIV. And there can be constructive dividend, there can be mutual fund distribution, there can be uh, normal dividends, DRIP dividends, dividend reinvestment plans, there can be stock dividend, and there can be non-dividend distributions. Okay. So this was all for today's session. From next session, we will start with calculating the basis. So basis of assets we will be starting. Thank you.